On my channel, I have a lot of new Tesla investors. Long-term investing is very important. So I'm curious to know, when did you start investing in Tesla?
I started in 2012. So,
2012.
yep, a long time
2012.
ago. Yep. And I've been just buying ever since and held it. And so you know what happened with 2012, 2013, stock tripled. And so you're
Yeah.
feeling good about yourself. And by the way, people were like going, why didn't you buy the car? And I have a friend who bought the Model S, and he's joking around, how come you didn't buy the car? Well, I invested instead. And then, of course, when it tripled, he goes, damn it, I shouldn't have bought the car. But I held it from 2013 all the way to 2018, 2019, when it just did nothing. That's so for people who have been holding it as long as I have, I've been through this before. We have seen the stock do nothing. But during that time, 2012, and even decade before, I was all in on Apple. So I'm a big tech guy. I'm a big startup guy. I love businesses and startups, and that's what I studied. And I'm a product manager by background. That is what I do for 3 startups that I founded myself. And it was all always Steve Jobs and Apple. Look what they're doing. Look what they're inventing and innovating. And their stock went up, and then it would crash. I would hear the thing from family and friends going, what are you doing? I'll say, hold, stay the course. Stay the course. This is all noise. And of course, now we're looking back, and Apple is the largest company in the world, right? Yep. One of them. They keep trading paces, $4 trillion now. And clearly the thesis of inventing the iPhone and onwards turned out to be true. So I was a big Apple and Steve Jobs fan. Then along comes Elon Musk, and he starts showing this new, electric vehicle market. And then once you realize that they are not just a one-trick pony, and they're just like Apple, where they've created a tech company and they're rolling out one business after another, that's when you double down. And so around 2020, that's when I decided, 2022, that's when I just finally just kind of started to transfer all of my Apple into Tesla. Ooh. Maybe a little too early. Got caught with the fall, but it's okay. It's like at this point, that's I will be redeemed. And I have no doubt in my mind that in 4 or 5 years from now, that investing in Tesla will be much better investment than Apple. That's my thesis. So,
yeah, no, absolutely. The part that you said that how Amazon and Apple were very volatile back in the day, well, that's because they were innovating. That's because they were creating new markets that has never happened before, which is the exact same thing is happening with Tesla, with the robotaxi and Cybercab. Once that happens, just watch what's going to happen. Like once there's actual revenue and profits from the Cybercab and from the robotaxis and then the bot later on, it's going to be amazing. It's going to be amazing.
I invested $10,000 in Amazon, like in the 90s. And so, of course, it's like hundreds and hundreds of thousands at this point, right? It's like, whoa, what a great investment that was. But I refused to invest in Amazon at the time because I remember looking at the PE ratio. And at the time, the PE ratio was 170. And I'm like, I was taught, no, 15 is the right number. Like I was a newbie. I had no idea, right? Just 15 is the right number. That's a safe investment. It takes you 15 years to pay back the earnings. And then Amazon .bomb, right? Amazon was about to go under. They kept putting all their money back in. They were no profit. Well, the reason there's no profit is by design. They want to invest because they have bigger visions than just books. And they're about to reinvent e-commerce, and internet was a wave. And that thesis, of course, turned out to be correct. But it's just interesting that at the time, the PE ratio was really high. And people were like going, how crazy for you to invest in a company with a PE ratio high. Well, if it's an innovation company, the PE ratio is something that you take, it's not something to really consider at that point, because the whole point is that if they invent something and that invention turns out to be right, we're talking magnitudes. We're talking disruption of an entire industry. We're talking not just doubling or 50% growth. We're talking about 10x. So that's why the PE ratio kind of like, I've learned my lesson the other way around, right? Which is like, ignore the PE ratio if you're talking about an innovation company.
Yeah. Thank you for explaining it so clearly. Oh my God. Like the amount of comments that I get, and
Yeah,
a lot of my friends and family, they go like,
me
"Oh,
too.
PE is like, oh, it's too expensive," and I'm just like,
Yeah,
you don't get it. They're not
yeah,
mature. They're not a mature company. They're not Coca-Cola that you can just slap on
yeah,
a reasonable PE. This is a company that's creating industries. You can't see. You simply cannot value that with a PE.
yeah,
Oh my
yeah.
God. But the way you explained it was absolutely perfect. And I hope the viewers can just take note of that. Companies like
Mm,
Tesla that are creating industries, the PEs do not matter.
yeah,
It's as simple as that. The chances of Tesla going bankrupt
yeah.
is, I would say it's zero. Like I
It's so
don't
low. It's
think,
zero. Yeah,
I
yeah,
don't think
yeah,
there's really nothing to worry about. But yeah,
yeah. So when obviously this, especially in the last 4 years, right? Things have just been flat in terms of the stock price, and so there. What I've learned is, as you talk to people, when you talk to somebody and say, "Well, what do you think about Tesla as a stock?" Well, it depends on what kind of investor you are and I am. So there is traders and there's investors. And the interesting thing is that we both can be correct. Okay. So when somebody says to me, and I've, will say, the stock is an auto company and the interest rates are so high that nobody's going to buy cars, they're correct. And the FSD story, the autonomy story and bot story are so far away, you're correct. And that's exactly, you should take your money out and invest in something else that you think will double. And so some people took their money out and put into Nvidia and they got lucky and Nvidia went up. And meanwhile, Tesla is flat. Even Apple did very well. Now, then what happened? But if you're a long-term investor, you don't know if you can't time the market, and this is where if the fallacy is, people think, well, why would I keep my money and I think it's gonna, it's a flat market. Yeah, you can. You try to time it. Maybe you're lucky, maybe you're not. You invested in the right something else you need to time properly, by the way, whatever you choose, that's going to go up. But then the long-term investors are correct too. So if I just held my stock, despite it flat for the last 4 years, and then it eventually hits, if I'm lucky, these disruptive innovation, my thesis turns out to be right, and I see a 5x, 10x. If I look back to the time, unless I had properly sold it at the right time, bought the right thing, sold that and bought back in again, if I timed it right, you're right, I would have had more money. But even if I just do nothing, 10 years from now, 5 years from now, I'm going to look back, you can't match my returns. The person who is momentum investing can't match my returns unless they timed it perfectly right. So Søren Basher has done a lot of analysis on this. Tesla stock has skyrocketed, right? Only 42 days. If you held the stock in
yes.
those 42 days, you would have seen all the benefit. But if you miss one of those days,
Yeah.
you would not get the 10x, 100%, 1,000x returns that you get now. So 100x returns that you get if you had invested. So it's just the skyrocket because of the thesis, disruptive innovation. You can't match it anyways. And so, yeah, that's why buy and hold for most investors is just the easiest, most logical thing to do. But if you think you're a good momentum investor, you can be right. You're absolutely correct.
Yeah, and it's very stressful to like time the top, time the bottom, and then you have to
Yeah.
constantly, keep your eye out. And if you're
Yeah.
wrong, you lose the opportunity. It's too much. That's why, like us, we just buy and hold. We just, if it dips, we just buy more, and then, we
Yeah.
just hold on to it for 5, 10 years, and then, and people don't understand that when the company 2x's, 3x's, 4x's, especially with a company like Tesla or Nvidia or Palantir, these happen in a very short period of time.
Yeah.
Especially with Tesla, yeah,
Yeah.
from 2012 to 2019, nothing happened. Like you
Nothing.
you actually would have lost money if you would have
Yeah.
sold for 5 years, which is just it's
Mm-hmm.
crazy. But then the year after,
Yeah.
18
Boom.
months after, you 10, 20 extra. It's insane. It's
Yeah.
insane. And that's how Tesla, until there's quarterly um, quarterly revenue and EPS growth consistently, it's going to trade like this.
Yeah.
Who knows? Maybe Tesla will stay flat this year as well. Maybe, I don't know. And then maybe next year it'll go. Maybe not. Maybe it's the year after that. Nobody knows. Nobody knows. But this is the attitude of Tesla. That's the attitude. That's how the stock is. It just stays flat for a long time, and then when something
Mm-hmm.
hits, boom, it goes.